Morning, Market Chameleons and Dimitri Pargamanik. How you doing, Dima?
Good morning, Will. How are you?
Excellent. Let's jump right into the disclaimer. What do you think?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. What do you see today, buddy?
Let's see. I guess today we'll just take a look at what's going on in the pre-market hours. We'll take a look at some upcoming earnings events. And if you have any questions along the way, let me know. We've been pushing out some new reports there. So if there are any questions on that, people can just put that in the chat and we'll go over any of those questions. But with that, let's get started. This is the pre-market report. Stocks trading in the pre-market hours. We've got the most active stocks, biggest percentage gainers, biggest percentage decliners. I see really quick that 48 made our percentage gainers list, 144 in the percentage decliners. From that perspective, it looks like a more weak bias or a weaker bias at the opening. I'm going to filter this list to see what's going on in a higher market cap stocks. So we're going to take this filter here, market cap, and look for stocks with 20 billion market cap or higher. And here we see 8 made the percentage gainers list, 44 in the percentage decliners list. So again, from that perspective, more bias towards the downside at the open. Couple of the stocks that are up in the morning, we see here these little alerts. The little E is telling us that there was an earnings either today before the market opened or yesterday after the market closed, and that the stocks can be reacting to an earnings event. The little N over here, if you hover over it, that's listing you some of the headline news. So if you click on it, you could go to the article, but at least you see the headline really quickly if you just scroll through them. I'm going to take a look at, let's take a look at CVS. So today I'll open one up because we've been jumping to the new reports. Let's take a look at CVS from a historical perspective. We know that it did report earnings. There's a little E there. So they reported today before the market opened. Right now we see up 1.2%, 154,000 shares trading in the pre-market hours. So that's like one of the more active ones. These also reported earnings, but not trading as much. So here we see CVS closed yesterday, $77.69, trading $78.80 in the pre-market hours, up 1.4%. Here's its range in the pre-market hours, 78.62, 80.32. So it's backed off its high from the pre-market range, and its VWAP in a pre-market 79.56. So that's its volume weighted average price. So here it seems like it's starting to weaken. And here's the chart over here in the pre-market hours. The biggest VWAP bar we see is traded between 79.64, 79.78, 63,000 shares trading in the pre-market. And if you guys want to scroll down here to the right, we have the news over here. So you can see CVS beats forecast. You could click on one of these, it'll take you to the news report. Down here, you got the VWAP table. So this is showing you minute by minute summary statistics. So we see 846, there are 2 trades, only 230 shares traded that minute for VWAP price, $78.75. If we compare that to the previous minute VWAP, it's up 3 cents. This is the high low for that minute, and this is the bid and ask quote at the end of that minute. Okay, so you have minute by minute statistics over here, so you could sort these and see, when there's heavier volume and at what prices traded. Okay. I'm going to go here. You also have these tabs over here to look at historical statistical analysis on CVS when it had a gap move to the upside, gap move to the downside, right? This one is earnings. So since it reported earnings, let's look at the historical return distribution in CVS after they reported earnings. So I'm here, earnings stock pattern. And this is showing the statistics for the last 12 quarters. Okay, so here we are today, May 4th, before the market opens. These are the historical dates of the earnings. We see how the company did heading into the earnings. So this is before earnings performance, day of earnings, and what it did following the earnings event. I'm going to scroll down here and look at the summary statistics. So over here, we see that historically, heading into earnings, it performed pretty well. So almost all across here, starting 2 weeks out, 82% of the time, the stock was up, running up into the earnings event, not including the earnings event. So you could see here, this is starting 2 weeks before earnings, right up to the day before earnings. This is a 1 week statistics, 3 days, 2 days, and 1 day. And we could see here on all these occasions, 82% of the time the stock increased, and these are the average percentage returns in those periods. Okay, what about the day of earnings? So let's look at from a couple different perspectives. Right now we're at the opening gap, so that's where the stock closed previous to reporting earnings and where the stock opened after reporting earnings. So over here, opening gap, here's for each of those, correlated with each of those announcements. So we see 91% of the time, historically, the stock gapped higher, right? So it opened higher than the previous day, 9% lower on average, gained 1.6%. If we look at the magnitude of the move, if we want to see what the magnitude up or down, so these are for options traders who trade volatility, we're looking at the magnitude of the move. If we convert all these to positive, the average move up or down 3.2%. Okay, that's in absolute terms. Biggest move to the upside was 8.9%. The lowest, the magnitude of the 0.9%. So how does this 3.2% compare? You know, we're at 1.4% now, so it's within that range, right? We're within the historical range, below the average. Okay, 3.2%. What did the stock do after the opening, right? So we know, 91% of the time gapped higher. How did it behave during market hours, right? So that's what we want to see. From the opening price, how did it behave during market hours? So from the open to the high of the day, on average, gained 2.2%. From the open to the low of the day, on average, it lost 2%. So you get a sense of the range that day it trades in, and maybe a slight bias to the upside, right? So the magnitude on average to the upside, slightly higher than the magnitude of the move to the downside. What about the drift? So where did we end up at the end of the day? So we're using the opening price as our benchmark. How did it do by the end of the day? 64% of the time drifted higher, 36% of the time from the opening to the close price drifted lower. On average, almost break even, 0.1% gain. What's the volatility from the open to the close? So we're just going to look at the average move up or down by the end of the day, plus or minus 2.6%. So that's how it looks the day of earnings. Price return distribution from a historical perspective in CVS around earnings. Okay. If there are no questions there, I'll start moving on to upcoming earnings.
Yep, you can move on, my friend.
Okay. So I think you guys got the idea here. You could do that with any one of these stocks. So we're going to move on to upcoming earnings events. So I'm going over here, upcoming earnings. And over here, initially, we just have kind of a summary statistics of what's coming up and what's happened in the last 2 weeks around the earnings. I'm going to use this filter here, look for stocks that trade at least 5,000 option contracts or more per day. And let's look at the full report. So I'm going to jump to this full report next 2 weeks. And down here, we got a list of stocks coming up with earnings. This is the expected earnings dates. So you can see here, these are today after the market close. This is the implied move. So when we look at an option straddle, you're buying a call, buying a put. That means you're paying premium for both options. And the stock has to move by a big enough percentage for you to cover the cost of that premium. So this is the cost of that premium, up or down. Remember, buying a call, you're betting to the upside. Buying a put, you're basically betting to the downside. When you have both, you're buying a straddle. So it's got to move in either direction by a big enough percentage. So let's take a look. For example, here, that's Zillow, I believe. You could click on this little informational sheet if you're not sure what the company is, and then you could kind of read about it. So here, this is Zillow Group. You know, these are the price. You have some stock statistics here, you know, where this is from the previous day. It hasn't opened yet, but you can look at the volume statistics, option volume statistics. If you want to read about the stock, you could go to this about. So you have all these tabs here to help you out, you know, figure out what the stock is really quickly. But I'm going to close this. So this is Zillow Group. And that straddle right now is implying a move of 10.3%. Okay, so that's the implied move based on the straddle premium. Well, what we want to know is 10.3%, how does that compare to historical moves? What did it actually move? What were the realized moves after Zillow reported earnings historically? So let's take a look. We're going to look at the 4 quarters, last 4 quarters, and the last 12 quarters. So in the last 4 quarters, the average move up or down after reporting earnings was 13.1%. Okay. Last 12 quarters, on average, you move 14.3%. So if we use those averages as our benchmark, we see, how does this implied move compare? Well, we're 2.8% below the 4-quarter average and 4% below the 12-quarter average. Okay. What is the high move Zillow made in the last 4 quarters after reporting earnings? The high move, 17.8%. The low move, 9.1% in the last 4 quarters. In the last 12 quarters, high move in Zillow, 26.9%. Low move, 1.4%. Okay, so that's, you're getting a range of the magnitude of the moves after reporting earnings. What about this premium? You know, or how does the premium, or where are the option straddles normally priced heading into earnings? So we just looked at the actual realized moves. What about the premium? So on average, the straddles were pricing in a 10.6% move in the last 4 quarters. In the last 12 quarters, on average, 11.2%. So we see that from the historical, if we compared to realized moves and the historical premiums, we're a little bit under, right? So if you're expecting a big move in Zillow, you know, if your analysis says, I think that Zillow is due for an outsized move, then on a relative basis, you're getting a pretty good deal, right, in that option straddle. Of course, if you don't think, then that's the other way. But if you do, it's like you're getting a little bit extra. So that's Zillow. I'm going to jump here to some other ones that I recognize. Here's Akamai, trades 5,000 contracts on average per day. They're also expected to report today after the market close, because we got a bunch today, like after the market close. So their straddle is implying a move of 5.8% in either direction. That compares to a 4-quarter average move of 6.2% and a 12-quarter average move of 4.8%. So we're 0.4% below the 4-quarter average, 0.9% above the 12-quarter average. High move on that stock, 16.9% in the last 12 quarters. Okay, And the straddle here at 5.8%, we see that's below the 4-quarter average and the 12-quarter average implied moves. Let me take a look at what's SKLZ. So I see that trades 41,000 contracts on average per day. So I'm going to click on here. And this is Skills, Electronic Gaming and Multimedia. Do you know this stock, Will?
I don't know.
They could read about it here. Mobile gaming. Just to me, it looks like, it's down 5.7% yesterday, down today. And that looks like it's actually, getting closer to its 52-week low. But trades a lot of option contracts, right? On average, 41,000 contracts per day.
There's always a bear market somewhere, D.
Yep. There's always a bull market somewhere and a bear market somewhere.
Yeah. No, the chameleons have been saying how hard it is to make money right now with the market at this, this level.
At these, exactly. So here, in general, right, it's hard at these levels because it's just the multiples have been, and we could take a look at those multiples, but yeah, the multiples have expanded by a lot. I don't think this one actually had a long history of earnings because I could just, from looking at the 4 quarters and 12 quarters, I'm getting the same, exact stats. So I think this probably doesn't have a long history of earnings. So I'm going to skip this one, just to cover more of them. But this is just telling me not a very long history. Lyft, that's coming out with earnings. So that trades 35,000 contracts on average per day. That's expected today after the market close. Straddle, implying a move of 8.1%. That compares to a 4-quarter average realized move of 8.2% and a 12-quarter average move of 7.9%. So we're 0.1% below that 4-quarter average, 0.3% above the 12-quarter average. So like really right there. High move in Lyft, 21.7% in the last 12 quarters. So that's, and we could see here at 8.1%, that's 2% lower than where the straddle goes out on average from a historical perspective. Let me take a look, a couple more. Here's DVN. Let's take a look at that. So Devon Energy, that's expected today after market close. Straddle's implied move of 6.4%. That compares to a 4-quarter average of 5.3% and a 12-quarter average move of 4%. So we're 1.1% above the 4-quarter average, 2.4% above the 12-quarter average. High move on that stock, 8.6% in the last 12 quarters. ATVI, that's expected to report today after market close. Straddle implying a move of 5.5%. So that compares to 4-quarter average move of 5.3%, 12-quarter average move 4.7%, high move on that stock 12.4% in the last 12 quarters. So kind of in line with the 4-quarter average, a little bit above it, 0.8% above the 12-quarter average. And if we compare it to where the straddles were pricing in going into earnings historically, we're below that. 5.5% or 6.2% in the last 4 quarters, 6.6% in the last 12 quarters. So I'm just seeing some of these straddles, are actually getting priced below the historical averages. So I'm going to come back to let's come back to this summary table. And let's just take a look at how the straddles have been performing in the last 2 weeks, right? Have they been actually been a little bit underpriced? Are they really priced in line, or are they overpriced relative to where the actual moves have been, right? So we're going to look in the last 2 weeks. I'm going to scroll down here. So we got some statistics here on stocks that have been reporting. And keep in mind, this is using these filters. So these are based on the conditions I have set up here. So in the last 2 weeks, the stocks that met our conditions, 68 40.5% of that group, the stock was higher. 58.9%, 99 of them, the stock was lower after reporting earnings, and one was unchanged. On average, the stocks that were higher at the opening, they gained 2.1%. The stocks that were lower on average lost 2.6%. So we see that the magnitude to the downside on average higher than the magnitude to the upside. The stocks that were higher by the end of the day were up on average 3.3%. By the end of the day, stocks were lower, down 4.7%. So to me, it looks like that at least all the stocks that met the conditions of our filter had negative, the bias was towards the downside so far after reporting earnings. So they could have beat, they could have missed, but whatever it was and whatever the company said looking forward, we see that, almost 59% of them were down on the day. What about the straddles? How did the straddles do? So if we just looked at all these straddles, right, and said, if we bought the straddle day before, sold it the day after, on average, how did those straddles perform, right? So without any, just the ones that met these conditions, that they had to trade at least 5,000 contracts or more per day. So 38.1% of those, the straddles were profitable. If you bought them, held them to the end of the next day after reporting earnings, 38.1% of them were profitable. 61.9% of those lost, were unprofitable. Basically, the stock didn't move enough. The premiums came in the next day, so you would have been losing, you have been selling them for a loss. Okay. What about the ones that were profitable? How much did they gain? Right. So on average, the ones that were profitable gained 51%. The ones that were unprofitable, about 2/3 of them lost 31%. So I guess you'd have to just do that math, 38.1% times 51 plus 61.9% times 31 to figure out on average if they're winners or losers. Probably should just add that feature in there, but I think just in my head, it's close. I think it's actually favors towards the upside, though, that they're more profitable. Here's if you did a delta neutral. So it's close. So delta neutral is, sometimes you buy the straddle, but you're not going to get it at exactly the spot price, right? So you could have a straddle with a strike price of 60, but the stock is $61. So that would, if you did that straddle, the call was more in the money than the put. So you kind of have a delta. It's not exactly, 50-50. So to make it delta neutral, you would hedge it with a stock. So how did that perform? So delta neutral, so we took the straddle and took away that initial delta risk. If we looked at that, 40% of those straddles were profitable, 60% were unprofitable, so close to this. But we could see that the returns were better on the ones that were profitable, 57% versus 51%. And the returns on the losers were, in some perspective, better, right? You lost less, 28.8% versus 31.3%. So this is probably a better reflection of the straddles because you're also hedging away that extra delta risk. Okay, so that's okay. So sorry, there's an extra condition here. So this is delta neutral. This here is looking at options where the implied straddle. So excuse me. So this is the delta neutral. This is delta neutral plus an extra condition where the implied move was greater than the historical average. In other words, the options were saying that we think that the move going forward is going to be higher than the historical average. So were those implied, were they correct? And yes. So here it is. So where those options were actually pricing in a higher move, on average, they did do better. All right. So far, they did do better. What about where the implied move was pricing in a lower than average expected move? So we see here 35.1% of them were profitable versus 65% unprofitable. So actually those straddles in the last 2 weeks, pricing in a higher than expected move on average did better from the long side. All right, so that's what the stats are telling us right now. Any questions there?
No.
Okay. All right, so really quickly, I just kind of jumped into the summary stats. If we have like 5 minutes left, Will, if you didn't get any questions, I think I could maybe just go really quickly to one of the stocks, just cover it unless
Sure.
you see anything. Nothing?
Nope.
Okay. All right, let's take a look at Lyft. So I'm going to go to Lyft really quickly, and this will kind of paint us a picture of what we were talking about. So down here, we see a graph here. These bars up and down, that represents the straddle implied move. So we start out at 0. The straddles, and remember, buying a call, buying a put, the stock has to move in either direction. And this bar is telling us the percentage move in either direction. The green bar, that's comparing it to the actual move after reporting earnings. So February 9th, after market close, Lyft was up 4.8%. The straddle was implying a move of 8.9% in either direction. So you could see that move was within that range. That to the red side, that's if the move was to the downside. So February 11th, 2020, after market close, Lyft reported earnings. It was down 10.2%. Straddle was implying a move of 9.4%. So that move, was went beyond what the straddle was implying. You could see here it's by like 0.8%. So that straddle, from the long side, would have been profitable, from the short side, unprofitable. Let's take a look at the summary stats. So we could see the options market overestimated the move in Lyft 75% of the time. On average, the straddle implied a move of 10.5% in either direction, compared to historical realized move of 7.9%. So we could see there about 2.6% differential between implied and realized move in longer term averages. I'm going to go to the implied volatility crush. So this is looking at what did the implied volatility do day after earnings. And this is people who are trading calendar spreads. So the short term options, they have more gamma. So you're looking at the move itself. As you go out further in time, those options have more vega risk, more time decay. So we're going to take a look at what did the implied volatility do in a 30-day constant maturity option. So this is an option with at least 30 days of 30 days to expiration. So that implied volatility on average was down 19% after reporting earnings. So day before earnings, the implied volatility was 71.4. Day after, on average implied volatility was 57.7. 5 days later, it ticked down a little bit more, 56.4. Let's take a look right now where we are. So right now we're at 54.6, right? So this is 54.6. We got still a day of trading to go, but that's on the low end. These are the last 12 quarters, or up to 12 quarters. I think we have less here. So it was as high as 95.9, lows 54.6, which we're at right now, and on average 67.5. You could see 71.4 day before. Day of earnings on average 57.7, as low as 42. And this you could see heading out. So that's really quickly Lyft. Again, they're coming out today after the market close.
Great job, Dina.
All right. Thanks everyone for joining. Stay safe out there. Hope you guys have a good trading day, and hope to see you guys tomorrow.
Thanks, Chameleons. Listen, I'll put a link. I'll actually put my email address, williammcbride@gmail, again in the link. If you want the Discord link, which was discussed, just email me and I'll send you it. Dima, great job. Thanks, Chameleons. Thanks.